Hey, hey, can you guys hear me? Perfect, perfect, perfect. How's everybody doing today? All right, just give me a second. We're going to wait for Ariel to jump on and we will get started. You guys have any questions? Oh, we got some comments over here. No sound. Can you guys not hear me? Yes or no? Good. Okay. All right. Perfect. Any questions while we are waiting on Ariel to jump on? Go ahead and drop them in the chat for me. All right.
Hello, hello, hello.
Say something. Make sure we can hear you out there, lady.
Can you hear me? Can you hear me?
I can. Can you guys hear Ariel okay?
I think they can hear me. Okay.
All right. Well, we got 2 viewers, it looks like. Hopefully more will join us, but we will get started.
Yes, ma'am.
All right. It looks like everybody's here because they want to hear about these taxes and why they're not coming out their checks. Sounds about right. Go ahead and give me a one in the chat or something. Let me know that you guys are here and alive and ready to talk about these W-4s and these W-2s. All right. All right. Some weirdness going on over here in this chat, but okay.
I know I see it too.
All right. We are going to get started. So I'm Shawanda, and then Miss Ma'am, go ahead and introduce yourself.
I'm Ariel. Hello, everyone. How are you guys?
All right. So we are going to be talking about W-2s and W-4s and how they work with each other and how what you put on your W-4 affects what goes onto your W-2. Guys ready to get started? All right, let's get this party started.
Let's go. Let's go. Let's
Hey,
go.
Toya. Hey, Shauna. Hey, Connie. How are you guys doing? All right. So we're going to talk about understanding your federal tax withholding. So that's really the biggest question. So a lot of this is a effect of how you claim deductions on your W-4. So we're going to start there, and then we'll kind of work through withholdings. Then we'll go into W-2s and W-4s, or the other way around. Anywho, Ariel's going to take it at that point.
That's what's up. I got that covered.
All right. So our common reasons for no withholdings. Number one, taxes, reducing your liability to zero, like the child tax credit, earned income credit. The second thing is incorrectly filling out the W-4, leading to under withholdings. And then income that is below the IRS threshold for a tax liability. So those are some common reasons why you don't see withholdings being deducted. Any questions so far about these three things? Again, go ahead, feel free to drop questions in the chat because I can see them. So we'll answer them as we go as well, because this is going to be an interactive session. So please do not be afraid to ask questions. So first, we'll talk about the W-4 form. So the W-4 is basically your withholding certificate. This is what you give to the employer to explain to them what your tax situation is. They're not going to know unless you tell them. So this is you giving direction of how you want your money to go, how much you want to come out, how much you don't want to come out. This is nothing anyone else has control over but you. So again, this is your instructions on how you want your taxes to be handled with your paychecks. So the mechanics of the federal tax withholding that's related to your W-4 is going to be your marital status, dependents, additional income, and any deductions. So those are going to be 4 factors that determine things. So as well as your federal tax bracket. So take a minute to look at this, because this is very important. It kind of helps you understand where you fall in line at when it comes to taxes. So if you're single, married filing jointly, or head of household, and the reason you don't see married filing separately is because it is taxed as single. So these are your tax brackets: 10% if your income falls within these numbers, 12 based on these numbers, 22, and so on. The highest taxable rate is 37%. This looks different for you self-employed people, and that's going to be another session. But again, this gives you a good idea of how much taxes you should be coming out in a percentage. And these are the 2024 numbers. So this is current year, the current year we're in. So you guys can make adjustments accordingly. So again, we said those key factors: your marital status, dependents, additional jobs, and withholdings and deductions, all again affect your W-4. So I'm going to go ahead and let Ariel take it from here, and she's going to jump in and show you guys how to correctly fill out the W-4 based on your situations.
Hey everyone, so let's jump into it, right? Let's fill out your W-4. So Latoya said why one of her clients went exempt and they still took taxes and she made over 80K.
You want me to answer that?
Go ahead.
So when you file exempt, you are either filing exempt from federal tax withholdings or state tax withholdings. It does not affect Social Security or Medicare. So those 2 things will always come out regardless if you file exempt or not. So that's why she still see taxes coming out. Did that help answer your question, Latoya?
Just make sure, Latoya, that you explain to her the reason why she needs to pay federal taxes, and make sure you help her update her W-4. Because I know she probably owe. Well, I know she owe. In the federal? Yes.
In the federal. amount. She has a federal amount, then she must have didn't claim exempt on federal. She probably could have possibly just claimed exempt on state because that is possible. So if you want to get with me, we can look at it together.
Okay.
Okay.
Good. I'm glad you did tell her to update her W-4 because I don't know what she over there doing. Okay. So let's jump into it. Let's go into the W-4. How do I change the slides?
I can check that out.
Okay, cool. So let's talk about single, right? When you're single, you're gonna fill out your first. You're gonna put your first and last name, your address here, and your city, right? And then you're gonna click single or married filing separately. Like Shalonda said earlier, when you do married filing separately, you are taxed at the single rate. They told. Okay. So Latoya said they told her because of her tax bracket, her job.
Yeah, that's a tricky one. So again, if you can, because you can inside of the tax software complete a W-4 for her to turn into her job
Mm-hmm.
that has the correct that's filled out correctly. So they can't because they are not allowed to change anything unless you provide that W-4. So it's obviously filled out incorrectly the first time. So again, just fill out another one and give that back to them.
And a lot of times, like when they get these W-4s, a lot of employers or employees don't know how to fill this form out because it did change. Because remember, back in the day, we used to just put zero. So now that we have to put in amounts, a lot of people don't know how to fill it out correctly. Okay.
So again, he's going to be talking about, sorry, the single and married separately, which is going to be your higher tax bracket as far as withholdings. And we can always go back to the chart once we get done.
Okay, so married, filing jointly, or qualifying surviving spouse, right? So you'll go ahead and put same like you did on the single side, first and last name, address, and then you'll click married, filing jointly, or qualifying surviving spouse. Qualifying surviving spouse is when your spouse died. It used to be widowed, but they did change the name this upcoming year. Any questions on that? Okay, no questions? Okay. Now let's get into your head of household. Same as before. First and last name, address, and you're going to click head of household, right? Make sure you put your social security over there in the left-hand corner, well, my right-hand corner, and we'll go ahead and fill that out. So a lot of times when people are filling this out, they say, okay, I'm single, but I have dependents, right? So that's going to be on the next slide because we're going to show you how to break that down. Any questions on filing statuses? No questions? Great. So in step 2, it says complete step 2 only if you apply to you, otherwise skip to step 5. So if you have multiple jobs, your spouse works, or anything of that nature. Okay, this will be your W-4 with head of household and 2 dependents. This is where it gets tricky, right? So of course you put head of household, so you have 2 children under the age of 17. So for each child, it would be $2,000. So you would put $4,000 here, and then you would bring it down to the bottom, and you would put $4,000 there. That's for head of household. Now, if you do single, okay. So this is the other slide where it talks about the same head of household. Let's say you take care of a parent, right? So you would multiply that dependence by 500. So you would have 4,000 plus 500 would equal 4,500, right? So a lot of times, us when our parents are getting older, they move in with us and we take care of them. That would be considered our other qualifying dependent, or if your child is over the age of 17. Anything you want to add, Shalonda?
Nope, that's just pretty much it. So this kind of takes place though when we used to put like 1, 2, 3, 4, 5, 6. on our W-4s back in the day. This kind of, it's a dollar amount versus a number. So that's the difference between this form and that form. But this is also where this form gets tricky as well.
Right. So, say for instance, you have someone who wants to claim they have 10 kids. I don't know why, but I have seen it before where they're saying, oh, they want all their money now. So, they would fill this form out and they would multiply it by 2,000. And then they would drop down. No taxes would be held at all out of their return. But when they go file and they'll say, oh, okay, well, I only have 2 kids, guess what happens? They in trouble because these forms need to match, right? So when you send this form gets sent to the IRS and they say, hey, okay, when you file your taxes, right, they owe. When you file your taxes, they're going to look at these forms. It may not be the day or tomorrow, but they definitely look at these forms to make sure they coincide with each other.
Again, so for you people that have dependents and you are looking to have taxes withheld, in this area is where you may have to pull back on how many dependents you are claiming on your W-4. That or just file single. And then it just depends. When do you want your money? You want your money during the year or do you want your money at income tax time? So that's where you have to make those decisions at.
Right. So a lot of people want to say, oh, I want my money during income tax time. So what they'll do is they'll say they have 3 kids. They'll just put $2,000 here and then they'll pick up the other 2 at the end of the year.
Correct. Any questions about this section of the W-4, which is step 3, where you're putting your dependents and other qualifying credits? So again, we are not seeing a lot of deductions in federal taxes due to the fact of how you're filling out this section of the form, because you are limiting your tax liability. First off, you're taking a head of household filing status, which puts you in a different standard deduction. So you're not even close to the threshold for taxes at that point of time. Because we'll look at the standard deductions for the current year as well. You have to make like $20,000 before you're even going to think about seeing taxes coming out with this filing status. And then in addition to adding numbers here, so then now you're increasing. So now you're about $24,000 and you still have not seen taxes come out. It's because, again, you claimed head of household and then you're taking all these deductions within that. So there's a threshold that has to be met. And it's based off of your standard deduction as well as any other credits that you may qualify for in your tax bracket. That's how this new W-4 is structured. Anything else you want to add on to that, Ariel?
Yeah, so just make sure when you're helping your clients fill this out, just make sure you explain that to them, because a lot of times they're saying that, oh, we're going to our employers and they're telling us just to put a number here, right? And that's not how it works. So we just need to make sure that when we're educating our clients and say, okay, let's look at your W-4 together. I think that's the best way for us to explain this form to them is let's look at your W-4 together. Let's go over it and give them the options so they'll understand it more and break it down to them. Because a lot of times they don't know what they're looking at.
And that's from even you as a taxpayer or a tax professional. As a taxpayer, go in there educated on what your tax situation is. Because again, that's not your employer's job, that's your job. So that's why we're presenting this to you guys today, so you can be informed. We're going to call you an informed consumer when it comes to taxes. So you're not, 1, owing money at the end of the year, and 2, not giving them a lot of money for free, interest free, the government. So again.
Right. And you don't want them to be surprised when they say, well, I ain't take no taxes out they ain't take no federal taxes out my check. First thing you need to say is, how's your W-4 filled out?
Yes. It's very important. So again, if you are one of those people, I want taxes out, just claim single. Just claim single and go about your life, even when it comes to married couples, because that gets tricky as well. Because they have an even higher standard deduction than the rest of these categories. So one spouse may have enough coming out and the other one may not, and it does not balance out because their income may fall within a whole nother tax bracket combined. So
Correct.
again, it's work that we have to do more so now than we did before.
So what do you put for single? You just check mark single at the top. Click
Yep.
single.
Yep. Just mark
Box
single and don't
in
take
step one.
any other step 3 credits.
Don't even fill step 3 out.
Nope, leave it
You
blank.
can leave it blank. You can leave step 3 blank at all. Don't even fill it out. So in step 1, you would put single, skip down to step 3, and put nothing there.
Yep, leave those zeroed out.
Yeah, just don't put anything. Does that answer your question, Latoya? Okay, cool. So in step 4, section C is where you would take out the extra withholdings of $25 to $50. So what I like to tell my clients is this. You're welcome, love. What I like to tell my clients is this. If you feel like you will not be taking out, they will not be taking enough federal taxes out, go to step 4, part C, and put in an extra $25. Now, say for instance, they have another job, right? They can take out, or they're self-employed. If they want to cover their taxes, they can take out the extra withholding from the first job to make sure it's being covered. Does that make sense, you guys? I like to tell them between $25 and $50 because, and it's every paycheck, every pay period. I like to tell them that number because it gives them that cushion for when they file their taxes. Now, yes, you can go lower. You can say $10 a week or $5 a week, but you just like to give them that extra cushion. So say, for instance, you have a self-employed person like us, and we still work a traditional W-2 job, right? We're not paying self-employed taxes right now for ourselves, but when we go to file our taxes, we have to pay self-employed taxes. But if we take out an additional $25 to $50, that may end up covering it where we don't owe.
Correct.
Does that make sense, you guys? Or do I need to explain it again? I've seen jobs not take any taxes from single earners despite it being marked single. How much money did they make? Question.
Go ahead, Shauna. Again, it's always going to be about thresholds when it comes to withholdings. So sometimes you may see a single filer not have taxes come out. That's because they have not reached that standard deduction within income.
Correct.
But a lot of times they still. So there's a worksheet that is at the bottom of the W-4. I know everybody's just used to seeing that first page of the W-4, but there's a whole lot of other sheets. And one of them is a calculator, as well as the IRS has a calculator tool as well when it comes to the high income earners. So you can kind of calculate where they fall at and how much additional they would need to withhold.
Right. It's normally like page 3 or 4. I think it's page 4. It's the last page where it shows you if they make over $100 and some $1,000, this is how much they would need to pay in taxes. You're welcome. And then, of course, they need to sign the bottom of the form. A lot of times people say, oh, they filled it out. They did it electronically. That's still fine. But they need to make sure that they sign the bottom of the form.
Correct. All right. So now let's talk about those pesky W-2s, right? So again, we talked about the relation of a W-4 to how it affects your W-2. So now we're going to look at the W-2. So what is a W-2? It's the official document that your employer uses to record and report your yearly deductions and earnings for the IRS to determine how much you need to be taxed at. It is a crucial document, again, for tax return preparation. So here we have a sample of a W-4 for an individual that filed head of household and has 2 dependents, and there's no withholdings taken out. So unfortunately, I'm sorry, the logo's in front of there, but you kind of can see the math here.
She had 0 withholdings taken out. The reason why is because she filed head of household and she put $4,000 for her 2 dependents.
Yes. So that makes her have 3 deductions, herself plus her 2 dependents.
Mm-hmm. Any questions?
And there's another thing that we have to consider when it comes to income as well. And taxable income is some jobs have benefits that they offer to their employees that are pre-tax. So if employees elect pre-tax benefits, that lowers their taxable income. So that's why you may see 2 totally different numbers in box 1 versus box 3, because they're pre-tax deductions for federal. So it may not be taxed at a federal rate. So those are like your 401ks that you may see pre-tax, and some other benefits that qualify for that. Not all benefits qualify for pre-tax deductions, but some do. So that also can affect the taxable rate. So think about that. They may have a retirement plan. They're claiming themselves. They're claiming their 2 children, and they're at the standard deduction of head of household. All things considered, they're well under the threshold, and that's why they don't see any federal income taxes coming out, because they still have not reached that threshold. Does that make sense?
Any questions on that? No questions? Okay.
All right, perfect. So we're going to move over to our next slide.
So in this one, this is an example of a client who filed single on his W-4. So with that being said, he actually did pay enough in taxes, and he would get a refund of maybe about like $400 or $500, right? Because his income was $23,500. So Latoya said, so they should claim only 1 child if they have 2. They can.
They can still claim single. This is what they can do. They can still claim single and claim one of those or 2 of those dependents as well. It's just single versus head of household. Either one of those. Head of household is going to put you I'm going to just call it a trick bag, where you may not see much tax come out. Single, you will, but they can still get those deductions for the kids if they insist on doing it.
Right, because remember, single filing status is 13,500, right, Shonda? What is it this year?
13,000. If you give me 1 second, I'll pull it up.
Okay.
I think I'm gonna pull it up. Hold on, guys. So single is 11,000. No, we're looking at standard deductions. So those are.
I think it's either 13,500 or 13,850. I can't remember if they raised it.
Those are the wrong year. I'm looking at 2020. And these again adjust every year for so it's 13,850 for single, and that's single and married filing separate. And then you have 27,700, and that's going to be your married filing jointly. and then 20,800, and that's your head of household status.
So, say for instance, your clients found a head of household on their W-2, right? But they didn't make the $20,000. They made like $17,000 or $19,000, and they also took the two dependents. No taxes are going to be taken out of their federal.
Because there's no tax liability
There's no
there.
tax liability. Now, if they made $40,000 and they took head of household with the two dependents, taxes will be taken out because there's tax liability.
But again, it may not be that much.
Right. It may be like if $1,000, give or take, maybe. So you may see a little bit of taxes being held out because they made $40,000, right? And they had the two dependents. Does that make sense? Everybody understand? Okay, cool.
All right. So that is the end of the presentation portion. Now we are open for Q&A. So feel free to ask us anything that may come to mind so we can help you guys have a better understanding of W-4s and W-2s and the withholdings. Sorry, I can't even talk today. Withholdings that come along with those things. So the chat is open for you guys. We'll definitely take questions.
You want to go back to the threshold slide for me?
I sure can.
So I remember somebody was asking what are the thresholds. Here's the threshold, and here's the tax brackets that they would be in. So for your high earners, they'll be taxed at a 30, depending on their income, right, Shannon? Depending on how much money they make, these are the brackets that they'll be taxed at.
Correct.
Does that make sense, love? So say for instance, you got a client and he comes to you and he's making $100 and something $1,000, he'll be taxed at 24%.
Yeah, and that's a single earner. So here.
Mm-hmm. Yeah, that's a single earner.
But as you can see, married, filing jointly, that's like double.
Mm-hmm.
And then head of household is within the same range. It's just a couple of dollar difference. But again, this bracket has a higher standard deduction, so they'll still be taxed less. So when we think about taxable income, it's going to be gross income minus any adjustments to the income minus standard deduction, and that will equal the taxable income for the client and for you as a taxpayer.
Right. So what you can do is when your client comes to say, because I know you may get this, hey, why am I being taxed so much? You can go ahead and break out this sheet and say, okay, you made this amount of money, so you're in the 22% tax bracket, tax rate. Correct. And then they'll say, what's the numbers? And you can show them the numbers for the tax rate. Should I recommend my clients to have an additional amount withheld from their check? What's the pros and cons? So I would say yes. I don't really see the cons in it. I see it could be pros and cons. So let me break it down to you, right? If they're not having enough money withheld, it'll cover. Right? If they're self-employed or they're just not having enough money withheld, they won't owe the IRS. I don't really see any cons in it. I mean, the con is they're overpaying, really.
Yeah, that is the con. They're giving the IRS money interest free.
Interest free. That's it. That's it. But would they rather overpay or underpay? That's what you should ask them.
Because the IRS is definitely not going to hesitate to add the penalties and interest to their tax situation as well. So for me, I'd rather be safe than sorry in those instances. My high earners, I usually tell them, especially when they are married, filing jointly, and I probably said this before, but I don't know if you were on the call, just do single. Mm-hmm. Just do single, and it will save you a lot of heartache at the end of the day.
I tell them the same exact thing because when they do the married filing jointly, they're not going to pay enough in taxes.
No.
They really not, and they're going to get end up owing. And then when they get that bill and it's saying $5,000, they're going to be like, "But I paid." And it's like, okay, but did you combine your when your income is combined, you're in a different tax bracket.
Correct.
And a lot of people don't realize that as our tax clients, where we say married filing jointly, we're adding that income in together. So we have to explain that to them.
Correct. In all honesty, I never really come across a situation where my single filers owe taxes
Right.
if they do their W-4 correctly and file single. That's never really the conversation that I have to have. It's more so of my married couples and my head of household clients where we're having this conversation and we're trying to figure out what do we need to do to increase taxes because they fall in these special categories. So it's like, do we bite the bullet through the year or not have as much money coming home in the paycheck so we're not owing or to get the bigger refund. So it's like you have to just pick your poison within that. But again, just have to know what you can afford and what helps for your situation.
And be honest with your clients. Break it down to them. Be like, look, you want to owe the IRS or not? Because them penalties and interest add up. And there's
Very good.
penalties and interest every single day. And they don't let up. So I always just tell them, withhold $20, $25. Think of it as your Burger King money or your Starbucks money.
Yeah. Or even for instance, I'll go into this, even though this is going to be a call that we do next week. When you know that you're probably going to have like a little side gig or something coming
Mm-hmm.
up, and you know that you're getting a refund this year, but you know that you're probably going to owe taxes because you're now going to be in a self-employed bracket, you can apply some of your refund towards your next year's taxes to
Mm-hmm.
alleviate having to owe so much taxes at the end of the year. There's so many different things that you can do within this. And again, we'll start talking to our self-employed people a little bit more in our next week call to kind of give you guys some I cannot talk, tips and tricks on how to save yourself money when it comes to taxes.
Especially with your DoorDash people.
Yep, your Uber, your DoorDash, and things like that. So we'll definitely cover those things for you guys. Were there any other questions that we can answer pertaining to your W-4, your W-2, taxable income, tax rates, or anything else that may come to mind for you guys?
Or filing statuses.
Yep, those things. All right. Again, we'll hang out for a few minutes if there's any questions.
You're welcome, Nicole. No worries, love.
Not most of you guys know how to get in contact with either myself or Ariel, just depending on whose side you came in on. But just get in contact with me if you have any questions. And again, we'll do a next week call that's going to talk about gig workers, self-employment, and how to plan for taxes. All right. Thank you, Latoya. Thank you, everybody, for joining us this evening. Again, if you guys have any questions, please do not hesitate to reach out. Thanks for joining us. You guys have a great night.
Have a good night, you guys.